This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. And today is the second small red day that I've had in a row, which is good because it could have been a much larger losing day, but I knew to walk away and separate myself from the screens because of the market condition. It was just not ideal at all. I know if you were trading today, you probably had a similar result that I did because the condition was just absolutely terrible and we had an inside day. Inside days are absolutely trash. It's non-farm payroll week. Conditions are just not good to start out the beginning of this month, and I have not been trading well in them. But it's only 3 losing trades, and I'm only down around 40 points, which is nothing that I cannot come back from because my risk is always managed. That is the most important part. So now on the eval, this is my first attempt at an eval in the first time in like 3 months. I've never made a single dollar trading ever, literally ever, and I've been doing this for over 2.5 years. You can see the balance is $50,072.54. The RP&L today is $96.72. So I'm down just slightly on the day. I took 3 contracts, stopped out on that. The main reason for my loss today was just simply an incorrect market approach. I was looking for the market to break lower at 9:30, but that's not what the market wanted to do. Initially on the day I came to the market bullish. Let's review today. Just get right into it. So net P&L, $96.72 down. How I feel, I was pretty confident in the idea of the market going lower because of the near-term condition before NFP. I was looking at the market, looking at how price has been trading recently. And today I went with the idea that more of a consolidation, not really seeing a directional move. So if the market is trading up in the overnight session, let's go to a 15-minute time frame. If the market is trading up and it opens at the high of day, and we have a premium gap opening, and the market has basically been consolidating on the higher time frame. We were kind of lacking direction, not really sure where we want to go next. Then it makes sense for me to anticipate the market to come back inside the range if it did certain things after 9:30. Now, what I was looking for was my bearish premium gap opening setup, playing the idea that the near-term condition is consolidation ahead of an NFP. Therefore, the run-up overnight is likely to get overlapped, and I can target a gap fill, which is basically what I just explained to you. The thing is today did not necessarily match the criteria for this setup, but I went with it anyways. I came to the day initially bullish, but 10 minutes before the market opened, I switched the idea and looked to be bearish because I have a tendency to hunt low resistance liquidity runs, which is what I learned from last month's session. So let's go look at last month's session recap real quick. Where is it? Notebook. Let's go to August. We'll look at one of the main killers for our market approach. As I have a strong tendency to frame the incorrect approach because I'm looking for a low resistance liquidity run. What does that mean? What does that even mean, a low resistance liquidity run? Basically, ignore this, right? Because, see if I can take this back. Replay trading. Here we go. Okay. So before the market opened at 9:30, whenever I'm looking for a low resistance liquidity run, I need to see a smooth edge in price, really clean, really smooth lows that can easily get taken out in one quick clean move because there's not a lot of resistance. There's nothing really to support price and keep it from going lower, so it's just going to clean all those lows out in one quick clean move. We got a good example of that. Let's find a recent example of that. Low resistance liquidity run, like for example right here. This is on the 13th, right? Where we opened high in the day. There's nothing in here to really support the market, so it's going to take that out in one quick clean move. Now I have a strong tendency to hunt that because those are literally my best setup. Those are the days where I take huge swings. It's literally the reason why I took this trade last month, which was my biggest trade to date last month. Okay, so that exact playbook, the bearish premium gap opening playbook, was the reason for this win right here. It was also the reason for this win and this win. So I have a strong tendency to come to the market hunting that just because it's my best setup, and I do it subconsciously too without even knowing it, and I did it again today. So I noted that as one of my main mistakes in market approach last month. I did it again today, though I knew that this was bullish. I approached the market bullish initially, flipped bearish last second looking for this to play out, and how the market delivered post 9:30 did not confirm that idea to be true, because the first thing that I did was it traded lower and took the sell side of this pre-market range. The overnight session did give something for price to grab onto in the form of a buy side imbalance, sell side inefficiency. You can see this gap on the 15-minute time frame here and here. So the first thing 930 does is it leaves the pre-market range lower, clears pre-market range sell side. If you note how it did not take that candle's high right there before it dropped down, right? This is the telltale sign that it's going to come back there and run out those highs, because let's go to a 1 minute. Do you see how it comes just shy of this high pre-market before 930, but turned away from it? What is that doing? That is the creation of buy-side liquidity, because anybody who is selling short in here, once these large down candles start coming in, where are they going to place their stop loss? Where they're going to see a double top here. High, high, lower, double top, a basic chart pattern. Sell short and take the place their stop loss above here. So that's the creation of buy-side liquidity. And if we look at the pre-market range, we zoom out a bit, we can see kind of the same formation on the downside. Bottom, bottom, double bottom. The market attacks that first. This is left intact above. So if it turns away, take the pre-market sell side first, and I know it's likely to go for these highs second. Another reason why the sell idea was never really confirmed was because of the first 5-minute close. If the market is breaking lower right at 930, I need to see the first 5-minute candle close as a large down close candle. We didn't do that here. It struggled to close over the pre-market low that we had right here. You see how it just barely closed over that? That's not what I want to see. I need to see a strong candle laid over that. And that tells me that the market is likely to see continuation beyond that. Now, regardless of that, I'm kind of taking in this information, right? But I'm looking for the low resistance liquidity run. I have a strong tendency to do that. I'm annotating this gap. I'm noting how the market drove up into it. This candle opened, traded up, took these candles high, but still closed down here. And then as soon as the open price of these up candles are crossed, to me, I consider that a change in the state delivery, which was incorrect simply because I got the market approach incorrect or the bias incorrect. I sold short here with the stop loss above the mean threshold of these up candles, because if it is a valid bearish order block, the market should not violate the midpoint of that. The mean threshold should not be violated if it is a valid bearish order block. But it does, because it's not a valid bearish order block, and that's the reason that I stop out. So you can get an idea of what I was looking for going into the open today. I was looking for lower prices, because I have that tendency to hunt the low resistance liquidity run. Though I knew that this was bullish, and the fact that it took the pre-market sell side low first, and we did not get that strong down close candle on the 5-minute, left these highs intact above, that gives the market a reason to want to draw back there. So if we look at Friday's setup and see how I kind of confirm these trade ideas. If we look at the 5-minute, what do we have on the 5-minute? Down candle, large down candle laid over the low a day. What does that tell me? It's going to continue beyond that. Not only that, but there's not really any reason for the market to want to trade higher, because this high cleaned out all these highs back here, and this high poked above that high right there. If you have the formation of a intermediate term high right here, market breaks lower. This was news manipulation up. All these candles are respecting the lower half of the higher time frame gap, annotated in that gray box, which is a sign of weakness. That's not necessarily the same case that is present today. So one thing that I noticed with me is that once I have winning trades, I have like a subconscious tendency to hunt that same move in the following trading days. For example, yesterday, let's look at the trades that I took yesterday. They were also shorts. So I went into the market again looking for more sells, sold the market here and here, kind of looking for the same move that happened on Friday. So Friday I had a really big winning trade, right? Cool. The following trading days, I go in looking for that same kind of move, and that's basically the mistake that I made over the last 2 days. Now, it's nothing terrible, nothing too terrible that's going wrong, and like everything's falling apart, all my systems are falling apart. This just tells me that I still need to just tighten down the criteria of my model, because what this motivated me to do today. This is what I worked on off of trading hours. Was I knew that I lacked an understanding, like a true understanding of my playbooks, because I have 4 playbooks, and I keep attempting the bearish premium gap opening playbook, because that is my playbook that has yielded the most return. Those are the days that I catch huge swings in price. It's the playbook that yielded my best trade ever, and so now I'm going into the market subconsciously hunting that. even though I know that that criteria is not necessarily there like it was today, so I don't know how to easily execute my playbooks. I need to know the criteria that makes it in the timing aspect of it. So I reviewed this. These notes are absolutely key. Okay, this is the stage, the process in a trader's development to achieve profitability. Now, I think I'm still right here in stage 2, a developing trader, because I'm still trying to tighten down and define my playbooks and get a good idea of them, and I'm not able to consistently and confidently execute on them with ease when they're there, which tells me still some work that needs to be done. Because if I look at my backtesting results, they're good. That's in a perfect environment, an easy environment with no motions. It's just a lot easier, right? It's backtesting. I need those results to equate to my live trading results. And because they're not the same right now, it still tells me that I'm lacking in the understanding of my playbooks. So I'm continuing to define them, continuing to work on them and understand them. So what I lack right now is, number one, market approach. Because setups come after you know your market approach and what your market understanding is. The first thing that you have to do is develop market approach and the way you see the market, the logic behind it. For me, that's simply looking at the daily time frame, the weekly time frame, looking how the previous candles close to tell me if the market is strong and should be bought or weak and should be sold based on how it trades around old highs and lows, gaps, order blocks, PD arrays, anything like that. And then you have to understand the logic behind the playbook. Then you have to understand the playbook through spending time with it, creating rules, and back testing. So this is something that I still have to work on because I keep hunting this one playbook, though it's not even there in price, that the criteria for it is not even there. So this is what I went back and defined today for the bearish premium gap opening setup is criteria, time window, and entry criteria, which is where I developed this. I'm kind of going back and developing a foundation for all my playbooks. Because if I'm not able to consistently execute on them, and I keep messing up and I keep taking losing trades trying to attempt these playbooks, then I still don't understand them well enough. So I went back, let's get a foundational understanding of the rules. What is the criteria that I'm looking for in order for that to be there? Well, I know that 100% of the time it's going to happen at the high day. The location is at the high day and price fails at the high day. There's no way that I'm chasing it lower at 9:30 if it's not at the high day. I think that's what I'm at here. And I need a sufficient premium gap opening, and I need smooth edge in the overnight session. So in this case, it kind of checks all the boxes, right? When the market is opening here, it's near the high day, it's not at the high day. And in this case, in this playbook, the reversal happens at the high of day. This is not at the high of day. The first thing it did was open and traded down. It took sell side first. So in order for this to be an actual reversal, I need to see it happen at the high day in order for it to be my bearish premium gap opening playbook. That didn't happen. So right away, then and there, I know that that idea is canceled. And then I went back and studied setup selection. Because if I keep attempting this playbook and keep getting it wrong, I need to know what is not that playbook. So I listed out all the criteria from all the losing trades where I've attempted this playbook and lost, and basically arrived at this understanding. And I went back and refined my rules for the bearish premium gap opening playbook. And I've arrived at this. So for a higher time frame narrative, based on the weekly and daily time frame and how the development of the weekly range, things like that, it's either going to be a previous day reversal where we take the high of the previous day range and we reverse, or it's going to rebalance to a premium of yesterday's range, because yesterday was probably a down close candle or any reason for me to expect the market to go lower, or we have an overextension of an impulse swing higher in the overnight session. Market criteria, this is what has to happen in order for me to attempt this playbook. It has to match one of these three narratives. This market criteria has to be present. It has to fail at the high day entry criteria, and it occurs at this time. So this part is extremely important. What if the time window within the bearish premium gap opening setup happens? Well, it's going to happen at 9:30 if it opens at the high day, or between 9:30 to 10 o'clock waiting for price to fail at the high day if it doesn't happen right at 9:30. And then for all my losing trades, I went in here and I set the rule to only show Only show this rule when the select trade outcome is a losing trade. And you can see how much money I've lost attempting this playbook when the criteria is not correct. So when the market opened off of the high day, like it did today, not necessarily at the high day, but off it, that's led to $1,500 in loss and drawdown. When price is at a discount at the higher time frame dealing range, and I'm anticipating this setup, I'm trying to look for it, it's led to $1,400 in loss. When the overnight impulse swing, this is a big one right here. When the overnight impulse swing gives price something to grab onto, when I can expect higher prices based on previous day's settlement, that has led to $960 in loss. And what I mean by that is, we have an impulse swing in the overnight session, right? It leaves gaps on the 15-minute time frame. That's something for the market to grab onto and climb higher. And that is a reason for losing trades when I'm attempting this playbook, because it's not the right market criteria. And then not the right time for this is going to be past 10 o'clock. So I went back and I've refined the rules of this playbook, just following the process. Now everything that I've gotten here is from a video by Umar Ashraf. I'm going to pull it up for you guys, because if you are a newer developing trader, I think you absolutely have to watch this video. It's absolutely crucial. And it is called, see if I can find it real quick. It is this one right here. 12 years of trading knowledge in 2 hours. So I've took notes on stages 1 through 3, and that's how I created this, right? I didn't go beyond stage 3 because I know that I'm definitely not in stage 4 or 5. I know right now I'm stuck in stage 2, still trying to develop and get comfortable with my playbooks. And these are the things that you have to do. You have to create rules. You have to backtest it. You need a backtesting process. You have to spend a lot of time of it. Backtest a lot in stage 2. I'm still in stage 2, so that's what I'm doing. So how long is it going to take? Completely up to you. Depends on how intentionally you can get reps in and how much you learn from those reps. It could take anywhere from 30 days to 6 months. I think I've been doing this for, I've been working on these specific playbooks for probably 2 months now. I think I started sometime in the middle of July, and now we're in September. So it hasn't even been that long, right? And I'm continuously refining them day in and day out and making them more mechanical and understanding them more. It's just a process. It's just things that repeat. Because if I show you guys these playbooks, you'll note that it's literally the same move happening over and over and over again. And that's the basis for what I'm trying to do here. You guys will see that it's quite literally the same move happening over and over again. Premium gap opening, trades up, reverses, fills the gap. Premium gap opening, opens, trades up, reverses, and fills the gap. And it's going to be the same thing for every example that I show here. Premium gap opening, trades up, reverses, fills the gap. And some of these have literally the exact same narrative that makes it happen. Like, for example, these examples are 3 years apart. The narrative that I framed for that day is an overextension, where basically the previous day range, this is the previous day range in this example. It's a large up close candle. So we had an impulse swing higher in the previous day range. So we had an impulse swing in the previous day range, right? And then we have continuation of that in the overnight session with no retracement whatsoever. The market opens at the high day, large premium gap opening, open, trades up, fails at the high day, reverses and fills that gap. You could take this even when the market is bullish. This is a good reversal setup. It's an overextension of that impulse swing. We have the same thing here, right? If we look at the previous day range, we had an impulse swing, market settled on a tie, overextension of that with no retracement whatsoever in the overnight session. Opens at the high day, trades up, delivers buy side objective, reverses, fills the gap. For this example, it's also going to be the same thing. Look at the previous day range, we made an impulse swing, extension of that in the overnight session, opens at the high day, opens, trades up, rejects premium objective, reverses, fills the gap. So it's literally the same type of move and the same type of narrative, and that is what I'm trying to get at here. That's what I'm trying to build here. So my rules are getting more and more defined for this specific type of move. And I'm starting to notice that the favorable trading days that I take are going to be days where there is a large gap opening, and when there's not, it's not going to be a good trading day. Now today, it's kind of an exception to that. We had a 70 handle gap opening, which is favorable. In this case, the move didn't come until the AM session around lunch, the 10:50 macro, that's when it came. Because we have that 10 o'clock driver, so one thing that I want to look into after today is when do these moves occur when there is a 10 o'clock driver, because I feel like that's something that's going to get in the way of when this move happens. Because if we look at all of these, this is all the same kind of move, right? Is there any day, what I'm wondering, is there any days where there is a 10 o'clock driver and it happens anyways? I think we have one exception to this right here. We've just had one day. I don't have screenshots for it yet. We had a plethora of new drivers, and that's when it happened. But besides that, all the drivers are basically done before 10 o'clock. So that's something else that I want to get into. You know, I'm trying to really understand these playbooks in every possible way that I can, and just get really good and really comfortable with my model, understanding it, understanding the logic behind it, so that I can easily execute it on every instance that it is present. Right now, the one that I'm working at is going to be the bearish premium gap opening setup, because that's the one that I am struggling with the most, because that's the one that I tend to subconsciously look for when I come to the market every single day, because this has been my best performing one so far. So now I'm going to get comfortable with it, understand it more, so that I can eliminate the losses that I'm taking on this setup, look at the market and be like, you're just trying to repeat that. It's not actually there in price. The criteria for that is not actually there. You're just looking for that move because it's happened in the past. And that's what I'm trying to get at here in this video. Basically, the entire mistake that I made today. And it all overlaps and ties in with what I've discovered from my monthly review on what has kind of been holding me back in my market approach. It's the tendency to hunt that low resistance liquidity run from the bearish premium gap opening setup. So now I'm working on understanding what does it look like when I look for that, but it does not deliver and I'm incorrect, which is what I developed here, which is now how I've created rules, which is now how I've created criteria, timing, entry criteria. So I just get better every single day, and that's it. That's it. You may think I'm doing too much, but I think I'm doing what I know I need to be doing. So that's it for this one. Talk to you next time.